The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 5th, fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. You can call right now, 877-927-6648. If you can't dial in, well, let your fingers do the walking. Go ahead, send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow up 89 points, 25,164 is the print. S&P is up 9, 2733. NASDAQ 100 up 0.8% or 54 points. Russell 2000 back a couple of points. Semis are up 0.8%. They're trading out at 1328. Everything is mean and green. Gold is totally flat, trading out at 1321.60. We know that 1322 level is a significant resistance area. Silver's up a penny, so we're going to say it's flat. Light sweet crude back a nickel. You've got natural gas back almost a full 10 cents here. We'll go take a look at that. Google to the upside is the leader dollar-wise. Priceline is right behind it, up 13. Google's up 15. Amazon's up 11. Mettler, Toledo International up nearly 11 bucks. AutoZone up nearly 10. Core Marketing Holdings is the leader dollar-wise to the downside, off 22% or 7 bucks. Alta Beauty down nearly 7, 2.5, 2.75%. Illumina down the devil, 666, off nearly 3%. So we have some things to look at to the upside, to the downside. The first question coming from Megan in the den, actually not the first question, but it ties into the first question. The first question was, Steve-O, I'm paraphrasing here, but basically it's Steve-O, should I put money in my IRA now? Now that question is really for those of you that are long-time listeners or short-time listeners, those of you that have heard me say, do not, under any circumstance, well, maybe there's a circumstance or two, but under most circumstances, do not wait till April 15th to make your contribution to your retirement account. Make sure you get that money in by January 30th, January 31st, the end of January, beginning of February. Of course, this is only January 5th. And the reason that question is being posed, I would believe, is because this listener or viewer is like, hey, market's not going down. Maybe I need to get in early. That follows up to the question that Megan asked, which is how long can we ride that bull and stay up on him? Well, that question is for a little bit longer than one might think. But with regard to, now what I'm referring to here, just let me back up. I'm going to just go to my newsletter chart. It's easier than me trying to actually find the chart itself. But here is the 1 year, whoops, that's not it. There we go. Here's the 1 year cycle over the last 86 years. This is what the Dow, now this is the Dow that we're taking a look at. This is what the Dow has done on average, okay? And we don't like average because if you look for average, you're going to get poor results out here. But on average, just saying, the market typically tops. Now this is the average over the last 86 years. Typically forms a top right around January the 6th. I think that's the 6th. I'd have to put on my reading glasses to make sure. 6th or the 8th, it doesn't matter. That basically we're at the 5th, we're at a Friday. So it typically tops right around now. Is that the pattern that is in play right here? I don't know. Could be. This is what happens on average. And then the market moves down into the end of January. Look, over the last 7 years, what the market has done is actually begun its top. You would have thought, I did think that Friday's action, not this Friday, last Friday's action, was a short-term top of the market. Regardless of whether the top, well, certainly wasn't then. Maybe it's today. Maybe it is Monday. Maybe it's not going to happen. Well, that's a lot of maybes out there. If it does occur, if we do see some type of pullback, to answer that question, should I put that money in now, what you would do is you would anticipate putting that money in by the end of the month. So should you put it in now? Because the market we may just be in a vertical move to the upside. So here's my recommendation. Knowing that we have the seasonal tendency still pretty much in play out here for some type of pullback, I'd go ahead and put 50% of it in now. But because to go back to Megan's question, how long can you ride that bull? Let's not get too cute on long-term money here with regard to timing it, whether it was Dow that's at 25.3 or it's at 24.3 or 24,000, because long-term, until we see the top of the market, markets are going to be priced much higher a year from now, probably 2 years from now as well, Megan, probably another year after that. That's how long this bull can be ridden out there. Markets are not anywhere near any kind of major top. The signals that you and I look for that have been present before the beginning of every bear market are not there now. If they show up, it's a different deal. So should you put some money in now? Yeah, I'd say you put some in now, some percentage, whatever it is you are most comfortable with, and make sure that you've got the rest of that powder ready to go at the end of January. So that kind of answers the question. Maybe throughout the show, well, let's do this. Let's do this here and just kind of continue forward because I've been gone. Just really got back to sit down in front of the chair here. A hamstring. Yeah, I've been hamstrung basically since last Saturday. Last Saturday morning while doing my normal workout, that's basically running 2.5 to 3 miles, then rowing, yeah, in a boat, rowing for a mile, then doing all kinds of other physical exercise. Well, in the middle of that, bing, a hamstring kind of a pull. Painful as can be out there. Thought I really had kind of healed it until, and this last Wednesday, decided to go just for a little jog. And everything looked good until minute 21. And then that hamstring just kind of blew up. So I was out getting some physical therapy on it. A rolfer. I don't know if any of you ever get massages or anything like that, but this is a massage technique. It is the best. I've used this anytime I've run into any kind of muscular problems out there. And I feel quite a bit better. We'll see as the day goes on. Hey, the nice thing is at 5 o'clock in the evening, what really helps those hamstring pulls? A little adult beverage. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. If you haven't tried David White's daily trading newsletter, The Path of Least Resistance, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Path of Least Resistance. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go to Mike in Chile, Ormond Beach. Mike, thanks for calling. Thanks for holding. How are you? And Happy New Year. Do we have Mike?
Yeah.
Hey, Mike, how you doing? Happy New Year to you.
Happy New Year to you too, Steve, and I hope that hamstring feels better.
Feels better right now. I'm going back for more physical therapy tomorrow morning, and I'll do a little of that adult beverage thing come 5 o'clock this evening.
Sure, that'll help you relax. Steve, if you were going to add more to the GDX, do you think we could get a pullback to like around 23, or do you think we're just doing like Basil describes, like a high-level consolidation where we're at? Looks like we've been kind of going sideways for the last couple days, with the exception of when the Fed announced 2 days ago, and we had the big spike down.
So sure. So let's take a look at those different possibilities out here. So 23. Are you basing 23 on any specific thing that you're looking at? So because you threw out 23, just kind of. What's the thought process behind that area, that number?
Well, I'm looking at, there were a couple times in the last week and a half where the candles seem to have contacted that area. And then if you go back to like the middle of November, it looks like the last previous high that we broke through was that area. So I thought,
Sure.
Previous resistance now becomes support. So
okay. So let's look at it. So 23. I like the number. As a round number. To answer your question specifically, I have one chart, which is the chart of the GDX, that says that a pullback could hit 23.16 if we're to take place today. That is Stevie's red line. That number will continue to change each day. So it may be a different number come Monday, Tuesday, and so forth. The reason is the typical pattern that occurs. Doesn't happen always, but it happens such a high percentage of the time that you go with this flow out here. And that flow says that on December 30th, as the GDX was moving a little bit sideways out here, that was occurring because of the phenomena associated with its price oscillator, the difference between two exponential moving averages, the 19 and the 39. When that gets the zero level, we typically see price stall. No matter what direction that price is going in, whether it's to the downside, whether it's the upside in this case here, to the upside.
Okay.
Then what typically takes place is somehow, some way, price of whatever that instrument is we're looking at, in this case here, GDX, and Stevie's red line will catch up with each other. We never know if it's a combination of a stalling of price pulling back, sideways. It's some type of combination. And so that number is 2316. For all intents and purposes, we should see Stevie's red line and price catch up to each other. 2 trading sessions ago, we had a Tom DeMark 9 setup count inside the GDX. Whenever that touches bars 5 and or 6, this case here, it touched 6, tells us that there's also a stalling pattern in play out here. So we have 2 signals to suggest that that's what's going on inside of the GDX. So to answer your question, yes. And a pullback to 2316 versus trading at 2368 would really not be much of a pullback. That is where I would go ahead and add price on a successful test. As an example, and I put this in the newsletter this morning, just so newsletter subscribers could see it. The number 1 holding inside of the GDX is Newmont Mines. Newmont Mining represents 8.8%. Now, I don't know why this didn't pick up today's action out here. Let me make sure that didn't pick up today's action. This was yesterday's. But here, so this is actually a great example. It's trading back a few pennies out here. If you take a look at what happened yesterday, price pulled back and basically touched Stevie's red line, bounced off of it. So Newmont Mining has set up a very nice bullish test. Exactly what we're looking for to occur inside of the GDX. If I look at market profiles out here right now, the GDX has bumped right into the top of the weekly box. That level, Mike, was 2377. Our high during this week has been 2384. We're trading at 2368. Boom, another area of resistance. Even if that resistance fails, the daily has a brand new box that formed today, says 2384. Center line of that box is 2326, and price is really in the center of those two, where the bottom is at 2280. So that would say 2280, 2326 could be explored, and all that would be mute if you were to see price move above the 2384 level. So I like your area. It's what I see as well. What questions does that pose from what I've thrown out there?
None. I just wanted to see if you agreed with, what I thought might be a good pullback area. So. Yeah.
No, it's so that's what I see. So you're right on there. Now, hey, what the temperature get to in Ormond Beach? Because it's pretty darn chilly a little further south.
Okay, well, Steve, I live quite a distance inland. I live like 16 miles away from the ocean.
Okay.
And we don't have the warm water, heating the air because we're so far inland. Yeah. I had a real heavy frost yesterday. It looked almost like snow.
No kidding.
And today there was a light frost because now the air is just so dry.
Sure.
But I've had 5 frosts so far this winter. I had 3 before Christmas, and I had a real heavy one yesterday and a light one today.
Wow. Well,
a lot of people think, oh, wow, Daytona Beach, Florida, it never should get that cold in that area, but it does.
Yeah, absolutely. All right, well, thanks for calling. I appreciate it very much, and Happy New Year. We'll talk to you soon.
Thanks, Steve. Bye.
All right, that was Mike in chilly Ormond Beach, Florida. Peter wants to take a look at the gold contract. So if we take a look at that, just kind of continuing on with the gold theme out here. Peter, really the same scenario, the same setup is in play out here, where it looks like gold could, not saying that it will, but what gold should do is pull back to the 1299 area. Again, the same pattern is what we're looking for. Will price pull back to Stevie's red line? Or will it just move sideways? Stevie's red line will move higher. We get the touch and go, and then price continues to move higher. Now, the real question should be, Mike should have asked it, Peter, you should have asked it. In essence, I'm going to ask it for you, is what happens if price falls below Stevie's red line? That is not what you want to see. It would say more retracement is on the way. And by more retracement, where is it that price could fall to if, in the case of gold, it gets below Stevie's red line? In the GDX, we sort of answered that question because we have a new profile out here, right? So, Mike, if it blows through 23 bucks, you and I would be looking at that 22.80 for a level of support. 22.80 to the 22.33 range out there. It's not out of the realm of possibilities. And we have a request to go take a look at the daily TAS profiles out here. I mentioned yesterday it looked like they were in the process of forming a new box. That is just going to be restated again. It did not form a new box. We still have a, whoops, is this it? We still have, son of a gun. Let me see here. What the heck happened? There we go. We're live. We're back on. Seem like I've lost my data. This is Steve Rhodes with TFNN. Let me try to put another quarter in the machine out here. See if I can warm it up. See if I can answer any questions about gold when we get back from this next break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So yesterday when we were on the air, we had noticed that the candle color wasn't the candle, the bar that we're looking at when we take a look at this screen here for the daily chart had turned orange. And typically when you get an orange bar, it is a signal that a new profile is attempting to form. By the end of the trading session, it was nothing more than a green shoot. So we do not have a new profile. So on the daily time frame, we don't have anything new to leverage off of. We just simply have the weekly top of the box at 1322 out there, 1322.30. We're trading right now at 1322.20, and that's really the resistance zone. We don't have anything more there. There was a question that why do I not make reference to the yen any longer when taking a look at gold? It's specifically because it's not working any longer. And, what's always cool to do is find correlations that are working at the time. So you've got some benchmark to go back to. This is the daily chart. This is the yen at the top, gold in the center, treasury bills at the T-bond futures at the bottom. These are all the continuous contracts. Doesn't matter. It really makes my point. You can see how gold has, in essence, had a one-way up. This is since the December time frame out here, and we haven't seen any kind of pattern like that inside of the yen. If anything, the yen is maybe sort of emulating what T-bonds are doing. The correlation is gone. Basically, it's vanished. It's no longer there. No idea if it's going to come back. But we're not making any trade decisions based upon what the Japanese yen is doing. Peter writes in the euro is better to follow. And so if we take, and that's a good point out here, and we can take a look at the euro a couple of different ways. If we look at the euro this way, this is a line chart, which means we're just looking at closing prices. And we compare gold priced in dollars and gold priced in euros. Top screen is gold priced in dollars. There's an important correlation. It's the reason why we pay attention to these different chart patterns that are out there. That gold priced in euros right now has not really confirmed the breakouts that we've seen inside gold price in dollars. Other examples of that, and Peter, you're exactly right, why you pay attention to it. Back here in the time frame between July 6th of 2016 and August 2nd, we saw gold priced in dollars on a closing basis make a higher high. But we did not get that confirmation inside of gold priced in euros. You can see that. It needed to close above 1232.20 in order for that to occur. Never happened. What took place after that? Simply a decline in price. The gold priced in euros was better to follow, to understand from a confirmation standpoint, just as Peter was really pointing out to each of us out here. If we take a look at gold priced in dollars between April 19th and June 6th, June 7th out here, it basically made a double top, maybe just a slightly higher close out here. But if you take a look at gold priced in euros, nothing even near that. What did that lead to? That led to a little bit of a correction out here. When if we just take a look at rising bottoms pattern out here in gold priced in dollars, it was that same rising bottoms pattern in gold priced in euros that broke first. This is the day, November 24th, right around Thanksgiving. Simply broke through that level, and that led to that next correction that took price down in December 12th. So if we just simply move, let's move beyond that. I'll go ahead and, because we can always put these lines back out here. But we take a look at what gold priced in dollars has done right now. If we just simply come back, and we can use a couple different swing points, but let's come back to this level right here, and we take a look at, you've got gold prices. That probably should have been a green line, but let's not lose sleep over that. I'm referring to the October 13th swing point, and if I just take a straight line from that same swing point out here, you're going to see that in essence, gold priced in euros has not, it's really not 1106, it's just slightly below that. But Peter's point that I'm making for him to you is, yeah, you don't have that confirmation. Now, that's just a non-confirm confirm at this moment. Doesn't mean that gold is going to pull back, but we know we've got gold up at these resistance levels out here. That's just one way to take a look at it. Another way to take a look at gold would be having it priced in yen. So if we take a look at gold priced in yen, aha, it's right up at resistance. How does all this, you thought I was going to say something else. How does all this great technical stuff work? If you take a look at gold priced in yen, that is my center panel out here, and we go to the swing point high April 1st, this is a monthly chart we're looking at. We go to the month of April 2013. We use that as one of our touch points. We use this is using the high now, and we use the January 1st, 2015 touch point. You'll see a little bit of a decline, but take a look at where price has moved into. No, I'm not saying that gold is not going to bust out of gold priced in yen, but it's sitting at resistance. weekly profile sitting at resistance. Gold not confirming in euros what we see. So it just supports at this stage here. It just supports that, and then you've got the oscillators and so forth. If we take a look at can gold pull back to the 12.99 level, Stevie's red line? Yeah, and if it pulls back lower than that, then we'll have to start taking a look at some other interpretations. We'll just have to see what data we've got. So that should kind of give you all of the feedback that I can provide with regard to gold priced in whatever it is that you want to look at. And somebody's written in quarterly gold contract yen chart shows gold yen poised to surge. Yeah, it does. But what we need to know, it's right now up at resistance. So you've got a bunch of resistance going on out there. Has not changed my outlook, folks, just so you know. But just take a look at where are things right here and right now. Now, let's go back and take a look and see who's let their fingers do the walking. First fingers do the walking comes from Tim. Tim says, can I reasonably expect to squeeze a bit more from GCO, or should I take profits here? Well, I don't know. Let's go see what we can find out is going on inside of this equity. GCO. First, let's go see what it is. That is Genesco Inc. So we've got it going on that chart. Let's go ahead. Let me do this. Give me 1 second. There was something going wrong. I don't know what it was. Let me do this. Let me just create a new chart out here. See if this gives us what we need to know. And then, because inquiring minds do want to know. Well, it looks like I'm a little bit hamstrung and more than one way out here. So I'm going to just simply have to rely on our TAS market profiles to Tim to go ahead and answer that question out here, because I don't know what's going on with the other charts. So your question was, can you expect to squeeze a bit more from this equity? At this stage of the game, it looks like price may want to come back and test the 30.61 area before potentially making its next move higher. Why do we say that? We say that because if we take a look at the movement here over the last couple of days, price has gotten back down into the daily box. Now, that call would be off the table if you see Genesco close above 32.73 today. As long as price is below the top of that box, there's always the potential that price will come back down to the bottom. Now, this should have pretty good support between 30.61 and 30.96. And so I don't know what your longer-term horizon, should you take your profit here. If I look at the weekly chart, looks like on a weekly basis, it wants higher price. If I look at the monthly chart, it says it wants to eventually get up to 37.94. Tim, that's my call on Genesco. Thanks for writing in. Happy New Year to you. When we get back, we've got some other let their fingers do the walkings to take a look at. You can get in on the action too. Steve Rhodes at TFNN.com. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Actually, if you send me an email, steverhodes@tfnn.com, it's not going to work out well for either of us, meaning that's not my email address. You have to send it to steve@tfnn.com, and then I will get us. So sorry for that little misstep there. John in Sarasota writes in, says, "Hi, Steve." Hi, John. And Happy New Year to you. What tools do you suggest to short the dollar? I imagine by tools you're looking for an ETF. I posted something in the den because I don't know the answer to that question. Maybe one of our denners or listeners does, and they'll go ahead and send an UDN maybe is one, UDN. But first let's take a look at the U.S. dollar index out here and just see what it's doing. Let's just go through a little bit of analysis out here. And we take a look at the March contract, the active contract for the U.S. dollar index. We can see that it's trying to complete an A to B equals CD pattern out here, which one interpretation is it could be a Gartley buy pattern. Now, that 1-to-1 price projection, John, is 91.19. And we do know that buyers are actually trying to form a bottom here. How do we know that? We know that because of the candle formation that formed on January 3rd. You had a nice little bullish engulfing candle. The body of the prior day was engulfed by the entire body of the January 3rd session out there. Now, the following day, it had a mind of its own. And I know that my red line, I wish I could show it to you. I can. There's something going on with the Ninja Trader software at the moment and its data feed. And trying to fix that while I'm live would be a dangerous thing. I can show you the chart here. This is the continuous contract, so it's going to be off a bit. But you'll see that price continues to trade below Stevie's red line on it, which is 92.12. That would be a reason to consider going long. The point I wanted to make about my red line is if you were to see price close above it, then you would not consider going ahead and taking the short side of the U.S. dollar index. As we speak right now, falling price oscillator below zero. That's always short-term bearish out here. But you've got to watch, in essence, the 92.12 level. But really, you'd want to put this on the tradable contract out here. Now, maybe, I don't know, are you looking for a longer term, a shorter term? So I don't know what the time frame it is that you're looking for. If we come back to this chart, and I now go ahead and put it on the continuous contract, so that way we can go to a longer term out here, the longer term being, I don't know, weekly, right? Let's take a look at the weekly chart. What we also have out here is you've got price trading into a swing point, John, and you may already know this, trade into the swing point from September 4th out there. Until the 90.99 level, using this contract, gets busted through, you know, you may just have some type of consolidation going on. It hasn't busted through there yet. So I don't know that the reward risk is really in it for you to go ahead and take that trade. Now, if that price gets busted through, my opinion is that you have a quite a long term it's that you're better off to wait. The reason is because that could then be a weekly A to B equals CD to the downside. That has a price projection in the 82 level, the 78 to 82 level inside the U.S. dollar index. So I would say you're too close to some potential support here to go ahead and take that trade to the short side. You might be right. You might absolutely be right on here. It just doesn't seem to me like the reward risk is there. And if you get it close below that swing point, that's swing point from the week of that began September the 4th out there, well, then you really have got something out there. Instead, I would be looking at the U.S. dollar index and saying, what is it that occurred up at the highs out here in the 104 area that you could have picked up on to go ahead and go short versus where it's trading into right now. So that's my 2 cents worth with regard to that. And again, that ticker symbol for the short trade might be UDN. Let's go ahead and punch that up on the screen here. Power shares, yeah, so that works. Looks like it works out there. Volume behind this, I don't know what it is. Let's just take a quick look out here. This is the Power Shares DB dollar index bearish, and volume-wise, not the most liquid of ETFs. It's traded 117,000 shares today. So, but that is one of the vehicles. Thank you to who posted that. Megan inside the Tigers Den posted that. So again, my 2 cents worth. Let's see what else we've got that has come in here. Requests. We've got one from Kay. Hi, Steve. You have called it right. Amazing. We've called it. This is a teamwork thing here. You know, you are the jury. You're the judge, actually. I just the prosecutor of what the signals in the market are telling us, and you get to make that decision out here. So I think you are amazing. If we go over and take a look at the Index 100, where do you think it is going to in the short term daily chart? I think the next size 66.85, not sure. So let's do it a couple of different ways out here. Let's take a look at we could take a look at, you said short term. I'm just going to go to the daily chart out here. The daily chart is just going to show short term. By short term, I'm going really short term here, so to speak, because we're taking a look at the small, I do mean small, A to B equals CD to the upside K, and that's the B point from December 18th that had 26.8 million shares. And when that was passed, it was passed with 29 million shares. Textbook in the art of timing the trade would say, hey, you have a confirmed A to B equals CD to the upside inside of the NASDAQ 100. In this case here, we're just looking at the Qs. In this case, that one-to-one target is 163.61. If we take a look at price and where it's trading, oh, wait, that's the wrong A to B equals CD. Something moved. We've got to come back here. That's not right. Let me give you the right one out here, and then we'll take a look at it. The one-to-one is 162.41. But as we take a look at that, 162.41 is very likely not the end of the small A to B equals CD. I know you're saying, how do you know that? I don't actually know anything. What I do know from the standpoint of this pattern is that you only had a 45% retracement. That says lots of energy to move to the upside. Price off of that C point has been somewhat explosive out here. Pretty good sized bars, everything considered. And this C to D leg is stronger than that vertical move from A to B. K. I say you have to consider 164.25, maybe even 166.56 as its final destination in the short term. And that basically is the NASDAQ 100. If we do put the NQ up here, not the NQ, the NDX, let's go ahead and give K those numbers. Really the same A to B equals CD. So 1-to-1 is 66.83. You've got 66.85. So we're thinking alike. But again, because if we take a look at the strength of the move, and we just let the candlesticks do the walking for us out here, do the talking for us out here, this leg is stronger than the A to B leg. If it's stronger on C to D than it is on A to B, what do you think the odds are that this is going to be more than a one-to-one move? It's at least a 40% odd, and I like those odds. 67.61 or 68.60K. That's Steve-O's call on the NDX 100 at 1:50 in the afternoon. We get back from this break. We'll try to wrap things up. I don't see any other requests out there. And YCS is also another instrument, John, that you can use to short the U.S. dollar index. Caveat emptor. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. It's been a great first week of the new year out here. And, a couple of things that you and I have learned, uncovered, shared with each other is that those folks out there that say, hey, last year the S&P did an 18.7% return. There is no way that that momentum is going to continue going. We know that they eat a lot of hooey out there, and it can't be very tasty because we know that's nothing more than BS. It's all before Steve went ahead and produced this yearly chart out here that shows you on what the actual movements have been for the last 22 years out here. And you can see doing 18% does not mean we can't exceed that or do something similar next year. 1995 was 34%. In 1996, went to 20, then to 31, then to 26.7, then to 19. A lot of hooey for anyone that says, hey, too much energy has been used out there. So it can be done. It will be done. You want me on that wall. Now, that doesn't mean that we won't see a retracement or two. And those retracements, just as the Dow did back in 1924, its run up to 1929, it had several retracements, several of the single-digit variety and several of the double-digit, the 12, the 10, the 13, and the 12%. So we could get a retracement, and that will seem like the market is over. That's 2,500 points in the Dow. You don't think people will? I'll be getting those emails from that guy that still wants 666, or gal, in the S&P 500. The move will continue higher in the market. If we take a look at the Dow right now, it's busted through the resistance of its horizontal trading range level of 24,808 and 24,799. It says where the Dow is headed to next is 26,402 to 26,579. And over the course of the long haul, well, you've got the Dow breaking out in every currency there is, above swing points. Money is not pouring in maybe just from your pockets. It's pouring in from pockets all over the world. And where's the Dow headed to next? At least 30,740. And then we'll start talking about the 54,430 level after that is accomplished. Stay tuned, folks. David White's up next. After David, you got Tom O'Brien. Have a great weekend. We'll see you on Magical Monday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. No matter what kind of trader you are,